Hey guys, what's going on and welcome back to another video. My name's Dion and today I'm going to be doing my daily market analysis, pretty much where I talk about what I see is happening on the market at the moment. I talk about the trades that I'm in at the moment, how I plan to manage them, and yeah, I'm just going to give my breakdown on the trades I'm in. So to kick it off here, we have NZD CAD. You can see that we're currently in profits at the moment. I'm not going to break it down for you because I would have done that already in yesterday's video. I'm going to talk about how I plan on managing this. So when I woke up today and I saw this, the first thing which came to my attention was this possible double top here where price could reject and come down. But I'm confident that it won't. I do see how it's in an uptrend. Just because it's showed some sort of resistance here doesn't mean it's going to just stop here and reverse and take me out. Pretty much we've seen a high here, we've seen a higher low, we still need to make a higher high. So price looks like it's currently in the midst of doing that, so I'm not concerned. Also, I was looking at seasonal prime to confirm this. Seasonal prime short term and long term is also pretty bullish on this pair, with targets to 0.885, and as you can see here, this is where I have set my profits for 0.885. It is a little bit conservative. If we are in an uptrend, I like to set my profit targets above the last high, because if we are in an uptrend, we should be making higher highs. There is always the chance that we will hit the last high and make a double top and play around there. But yeah, that's just how I like to do it. But for the sake of working on this new trading plan and strategy, I'm going with what seasonal prime is saying. It's saying 0.885 and it makes sense. So we're sticking with that. Currently strongly bullish on this pair, so I'm not doing anything with that. Now USD CAD is a different story. This is one of the two pairs where I am a little bit unsure about. You can see where I entered. It's actually treating my entry as a resistance and it doesn't want to break through that. We are at a support right now, which we did see a strong rejection to on this 4-hour candle here. Might move this out the way. Yeah, so this 4-hour candle here. Now we're currently in quite a bit of drawdown, just hovering around this support. So since price has not broken this support, my trade is still valid. Only once it breaks the support, then it's telling us that price will most likely make its way down to the lower levels. So probably here somewhere, 1.244. I would not be surprised if it does break and come down to this level. But for the sake of the trade and for the sake of this new trading plan strategy, this back testing, whatever I'm doing, I'm going to stay in the trade. I am completely aware that I may lose this trade for a 1% loss, but that's okay. It's a part of the learning experience. I would rather take the loss and feel the full effect of the lesson rather than cut the loss here, see price come up my way and go into profits and then be like, oh, I should have just kept in or whatever. No, I'm going to ride this out till the end. I am still not positive, but I do feel like price will make its way up. Although seasonal prime did move the profit targets from up here down to 1.266. So currently this is only a 1.2 risk to reward ratio trade. It's not looking like a strong trade. Like, it's not giving me the returns that I want. We're down at this support, we're struggling to break through. It doesn't look very strong, although I may be wrong. Something else which I don't like about this trade is that I was on seasonal prime. It gives you a lot of information, pretty much. One of the information being where are the retail traders placing their positions. It was saying that on this pair, most of the positions are going long. Now, if most of the retail traders are going long at a obvious support, I don't think it's going to be going long. But anyways, we'll see what happens with that. I'm unsure with this trade. I'm not a big fan of it, but we're going to keep it. Now, we have Euro AUD. This trade's going all good at the moment. So yeah, bearish to 1.58, which we do have here. And I do believe it is a strong trade, according to seasonal prime as well. We saw the strong rejection. And may I also quickly come in real quick and talk about my entries? I do feel like my entries have been pretty clean. Like, okay, never mind. I think it was just that one. This is actually a pretty nice entry here on this euro pair. Went short, appropriate stop loss, good take profit, Currently, we've made our first leg of this bearish movement. Looks like we're pulling back at the moment, trying to find like a good retracement area. If I pull out my fib, then let's see what's going on. Okay, we haven't pulled out into anything significant yet, like any significant fib levels, but that's fine. Looks like we're showing some strong rejection to this area. If we go into the smaller time frames, we're just rejecting the last high around here. So yeah, confident trade. I'm feeling good about this one also. USD JPY, it looks like, yeah, not a great entry. We went into a bit of a drawdown, had a little bit of a play around in this resistance, but now we've found the strength to push back down. And hopefully this is a strong engulfing bearish candle, because that would indicate much more downside. I can see this trend line here also. We are on the smaller time frame, so it's not as significant, but a break of this trend line would be awesome. If we get a good close below there, then that would further indicate that our bias is correct going short. This is actually a strategy I used to trade, especially back in the FTMO days, like literally 7 months ago. I would use this trend line as a confirmation until price had closed below the trend line comfortably. Then I would enter short, but I don't trade that way anymore. Now I use my main strategy from back then more so as a confluence to the strategy I'm using now. And we have another Euro pair, Euro NZD. Let me talk about it. The entry again was a little bit crispy, a little bit of a drawdown, but that's fine. We ended up making our way back down into profits. We're making lower lows, lower highs. This trade is looking very promising at the moment, and yeah, there's not too much else to say about this one. So yeah, it's good. Also, there were a few more trades I wanted to take, but I didn't because I couldn't. I had already allocated my entire capital to these like 5 trades. I only get 20 times leverage on this platform, which is eToro. So I do have to put up a considerable amount of my capital for each trade. It's not rare for me to be putting up like $700-800 per trade. So yeah, it'd be like that, but it's fine because it's got me thinking in different ways. Like, I'll explain it in another video, but actually it will be in my vlog. I talked about it in my vlog, which will be coming out later this week. Yeah, I'll quickly go over 2 trades. I keep looking down because I have my notes in front of me. I pretty much did all my journaling and everything, so all the fresh information is right in front of me here. Now, there were 2 trades which I missed out on because of this capital and leverage issue. This was Euro USD and CAD CHF. So I'll put that on the charts now and we'll get into it. So here we have Euro USD, and I did remove it, but I did have plans to go short here. I wanted to pretty much use the rejection to this level as shorts down to the next level. We saw the USD, the US dollar drop considerably. I'll go over that in a sec too, but that rallied price up. We saw the correction, and then we saw another rally up to this area. Now, I saw on this second touch, I wanted to enter on this second touch, but I didn't because of this capital issue. I'm glad that I didn't because price instantly, would have come up and took me out for a 1% loss. That would have been a very quick loss, so I'm glad I didn't enter that, but hey, that's what happened. So I'm no longer looking for entries on Euro USD. Now with CAD CHF, this was another trade I wanted to enter, and this one would have been a really clean, crispy entry. You can see with the yellow box, if you're an OG viewer of this channel, you know I use these yellow boxes as fib retracement tools. So I'll quickly break it down. You see from this low, this high to this low, well, it was the low at the time. I will use the replay tool. It was something like this. So I had seen price make this low, and it started making its way back up. So I'll quickly talk through it step by step. We saw it come up here. It created the low. So from high to low, it created this golden zone here. You see the 6.18, the 0.618 and the 0.5. That's what I classify as the golden zone. Price traced up into the golden zone, but I didn't enter short straight from there because I've been trading for a bit now, and I do understand that the first touch doesn't necessarily mean that's going to be what moves the markets. We may see a trace up for a double top or something. I now look for price to reach my area of importance, I guess. So in this case, it's the retracement area. But then I also look for further confirmation in the form of a bearish pattern or a double top or something like that. So I waited, price kept going down. Now, price came up for that second touch in the form of a double top. That's where I wanted to go short. And honestly, I would have probably entered on the next candle. Let me see. Boom. So there, I would have seen that rejection from there. I wanted to enter, keep price just there because you see there's still wicks to this area. I'm not going to place my stop loss based on the most recent candlestick price action. I do want to consider price action from earlier. So probably would have come up to about here if I wanted to be safe above these candlesticks here. But it really depends on the entire situation. If I was to pull up, for example, like a volume, like fixed range, so this just pretty much tells me where the volume is in this area of price. So I selected maybe like from here, this top to this bottom. I want to know from here in time, so from the 23rd of July at 2:30 in this range, where is the most volume? And we can see here that most of the volume was in this area, like in this fib zone. Now I mean, it does take a bit of practice to understand how to use this tool, but I also like to use this to find my my stop losses and stuff. So looking here, most of the volume was here, so I could have safely put my stop loss very tight, but I wouldn't have. I would have looked around this area, looked for where most of the shorts are, most of the longs. If I saw there were lots and lots of shorts just here, then I can safely place my stop loss above that area because I know when price comes up to that zone, there will be lots of selling orders to help me or to help price like hold strength and not push over because there's lots of shorts pushing it down. I hope that makes sense. If you want to see a video about how I like to use volume profiles in my trading, then put a comment in the comment section below and I will make that. But yeah, pretty much I saw that rejection. And if we cancel the thingo, this is where we would have been now. So we would have been roughly just under 1% profit, but price action is showing me some pretty awesome stuff right now. So unfortunately, I didn't enter this position because of my liquidity and leverage issue, but that's all good. So that's just my trading plan at the moment, like my current this and that. We'll go over to the pairs which I like to trade, which is AUD USD, which I did get taken out for a small, it was pretty much break even. It was like 60 cents loss or something. But yeah, the dollar yesterday was doing some interesting stuff. It's doing some very interesting stuff, especially around this area. This is where the crazy shit started happening in like Euro USD and stuff. The dollar dropped pretty much from this area here, which is awesome. I can see some sort of double top. So if price advances to the downside, we could see a push up in the Aussie dollar. Now, the US dollar has been like strong recently, you can see from here. So a strong USD would mean a bearish AUD USD. So coming over into AUD USD, I do feel like, well, first of all, I feel like the dollar could push down further to gather some strength before pushing up and breaking these levels. For that to happen, that would force AUD to make a rally to the upside, find some strength, and then push back down. So this also is, like this plan here is also my ideas in confluence with seasonal prime. So yeah, seasonal prime's a big thing for me this month, and I think I might extend my membership for another month because I feel like 1 month isn't enough to, you know, exactly get used to it. I do feel like I'll need 2 to 3 months. But I'm doing as much as I possibly can now just to get ahead and to become very familiar with it. I'm not going to say like, oh, it's going to take me this long to get used to it, so this is how long. No, if I put in the hours, I'm going to get used to it quicker. So I've been using it as much as I can for a lot of different things. And yeah, that includes my actual trading on my normal pairs, the AUD, gold, GA, GU, this and that. So yeah, here's another trade idea I have, although I do feel like this could happen too. We could just see a rejection from this area and just come straight down. Would not be surprised. Either one of those could happen. My normal trading would say this, the second option, number B. Just reject this area and come down. Seasonal prime says we are looking for like a bullish move before dropping. So we'll see how that plays out. Anyways, that's it for today's market analysis video. I really hope you enjoyed it. I had fun making it. It's really nice just to go through my trades, talk it out. I do get a different perspective on what actually is happening in the markets and my psychology and this and that. So yeah, I hope you enjoyed it. I'm going to try and do this every single day, see how we go. But yeah, I'll catch you in the next one.